Welcome, everybody. This is the Thursday evening Viper Trading webinar. We are here to look at some futures markets and trade setups on our charts tonight. And tonight's topic is scalping and stops are critical to your success. So without further delay, let's get over to some charts and get our disclaimer out of the way. So let's see here. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Alrighty then. Let's get on with it. So I'm going to start today with ES, but I'll tell you what I'm going to do. I'm not going to spend all session on ES because I want to cover just for some very specific things here tonight. And then, and I want to address a question. Chuck, I think you brought this up, or Brian, maybe it was you. Well, first of all, does everybody see the ES chart, 4-range ES? My cursor moving around, ES chart loaded up? Yes? Box versus grab. Box versus grab. Box versus grab. So let's make that one of our first topics because that comes up a lot. And let me explain what that means. So let's get some definitions all together in our heads. By the way, if you're visiting here or you're new, welcome. If you're on a free trial, welcome, welcome. Just to quickly explain what you're looking at here, we here at Viper and all our members trade the futures markets intraday. We do not hold overnight positions. This is not your buy and hold, IBM or Apple for 20-year plan. We capitalize on short-term volatility in the futures market. So we get in and out, and before the close of the session, we're done. Now, this is a 4-range chart, and you can notice here we have background colors, bar colors, swing levels, power meters, which is the trends, predictors, swing levels in real time, and of course the bands. Mid band's the big thick middle band, 1, 2, 3, 4 bars bands above it, 1, 2, 3, 4 bands below it, and the thin red line, of course, is what we call line 2 on the top of band 2, and the thin green line is called line 6 on the top of band 6, 6, 7, 8 top bands to the top. These feature prominently in our trading. We are, by definition, a retracement traders. In other words, we look for trends in markets, and we look for a push or a thrust in a given direction. That can be down or up. And then we wait for a pullback or retracement into support or resistance to buy or sell the market. So let's look at some examples of trades before we get into to address the whole grab versus box question, which I'll explain in just a second. But let's take a big overall look at what we're talking about here. Now, markets go through periods where they consolidate, and markets go through periods where they trend. Sideways price action can be in a trend as well, not just as a standalone. And I'll show those two and how they're different and how you can tell they're different. Let me show some examples here. Look here to the left. Now, today's the 14th, of course. Hold on a second. Excuse me. Sorry about that. A tickle in my nose there. So midnight Pacific is right here. I'm here in California, so adjust this to your time zone accordingly. Asian session ending here, European session beginning here. Okay. Now, overnight, here's the close of the market from yesterday at 1:15 right here, approximately right there. Now, going into the close and into the beginning of what would turn out to be the Asian session, you have what's called the thrust, and the thrust is in the downward direction. And for those of you who've been with us for a long time, and those of you that are new, the most obvious thing is you can see the background turns red when this little swing is broken right in here. Now, when you see a thrust like this in the down direction, and the mid band and all the bands start stair stepping down, see the little stair steps starting to happen. The bars are predominantly red. You see red stealth lines, this sort of little sneaky snake line that we've had forever. It's called stealth. We use it a lot for like trail stops. We use a combination of line 2 and 6 in the stealth line for trail. You'll notice that in the live room. Very prominent in our trailing stop strategy. Now notice what happens here. Now I'm going to blow this up and try to give you a very detailed explanation as to how we get into trades and what your other options are. And let me make sure I'm in sim here. Stand by, please, 1 second. I'm just going to double check him. I'm sim 101. Nope, oops. Nope, get into sim there. Get into sim. There we go. There we go. That's a good puppy. Let me double check. Sim 101. Okay. I don't want to start firing real trades in the webinar. I don't want to do that. Then forget about them. That wouldn't be good. Okay. All right. So here's our thrust. We know we're in the downtrend. Now, notice how the market starts to retrace back up towards the midband, like such. So the question of entry entails how and where exactly you're going to get in. Most of you know, of course, we have the object trader tool, and you hear things like, go ahead and box it in there, box it in here, box it in there. If it hits, 52 3/4, I'll put a box there, taking shorts only. So what we're referring to is, let's use this as an example right here, that you would physically take a region box in Object Trader and draw it like such. In the case of the downtrend, we would only enable short only, right? Downtrend is short only. Uptrend is long only, right? Now, in this case here, if you had positioned a region box short only, as I've shown here, you can see very clearly that a market order would fire short on the close of this bar here, and depending on the slippage, you'd be filled short right here. Okay? Now, those of you that have been asking, and I get this question a lot, so don't feel bad or weird that you're asking this question. I get this question, and Gary does too, a lot. And let me explain what it is. Some people are asking, well, the actual technical kiss of this market and roll occurred right here on these bars, right? So some of you say things like, let's go try to recreate this happening. And let's put the Sim 101 out here. And you say things like this. Could I put a sell limit order right in? Let me blow this up so everybody gets a real clear picture about what I'm talking about here. And let me do it this way. Let me show it this way. This is a good way to show it. It's going to really illustrate my point. Okay, good. All right. So we know we're getting short, and we want to get short anywhere around the midband. That's kind of our go-to trade. We all know that, right? So people say, well, can I put sell orders, sort of right at or around the midband, getting me filled? Let's look how it could be as much as 8 ticks, right? So let's say hypothetically you're filled on this one at 52 1/4 versus, well, that's exactly 8 ticks. It could be more than that, depending on where your actually fills were, right? See that? So what we're saying is that if you put a sell order up near the midband and you are filled, you have a versus a box entry closing outside the box could be a difference of as much as 6 to 8 ticks or more, depending on the market. Not all markets are conducive to do this on. ES would be a good candidate to do it because it moves slowly. It tends to respect support resistance line. It really respects the midband quite often. Most days it really respects the midband. And so these tend to be very low risk trades, putting limit orders around where you want to get in. In other words, normally you're going to get something move in your direction, and rarely is it going to flip just flip for no reason but come and bite you. Now, I would not do that on the Russell. Okay, Roosty Bird is a wild beast. You do that on the Russell, you could stand to get bit hard. Okay, so watch yourself on that. Does everybody see the difference of what I'm talking about? Crude oil, I would only do, Brian, on days where the volatility is calm. You don't have the shotgunning algorithm bars. If it's a morning where the algos are running and the bars are shotgunning all over the place, absolutely not. Absolutely not. If it's today, like today was very methodical, like it would have a nice move, except for that one BIP. Anybody get bit on that oil BIP? Remember? I don't know, so something came, like some cell program or whatever, it dropped 60 ticks in like 10 seconds. You've got to have your stops in, and we're going to talk about that. Yeah, that was crazy. Now, let's look at a couple other ones. Okay, let's just not look at this one. This is a good example. Let's look at a different one. Now, the other ways to get in, okay, so you can get in with a region box, close of the bar. You can get in with a limit order. Now, where would be your stop if you put limit orders in like here? Okay, here's your sell order. Where's your initial stop going to go? Above the midband? Line 5? Up here? Okay, so here's the swing. Here's the midband. They're only difference by a tick. You could go 2 or 3 ticks above the midband, and you would put you're selling short on a kiss and roll, so you have a very tight stop. I would go, as much as perhaps 2 or 3 ticks above here. Buy to cover stop. Buy to cover stop. Right? Well, that's okay, so let me be clear about this, okay? There are pluses and minuses on taking this type of trade. And let me be very clear, and I strongly urge anybody who's going to experiment doing this, first of all, once again, do it on ES or a slow instrument like bonds or something. It was very methodical and slow, so you're not going to get burned. Now, you could get, if you don't use the box, a condition where the bars go 1 or 2 bars in your favor, and then for some reason it flips like this and then takes you out. Now, if that happens, you're going to want this stop as tight as you can get it. I mean, if you want to go literally 1 tick above the midband, you could do that. I personally think that's a little tight. I think you do want to give it a little bit of wiggle room. I mean, we're only talking about a few ticks here. Okay? We're only talking about a few ticks here. So, I mean, you can give it, your tolerance for risk should be more than 1 or 2 ticks, obviously. You can use Chart Trader, Chuck. You can use. I think in Ninja 8, we're going to put in the ability to put limit orders in using Object Trader. You can just right-click on your chart. Make sure you have the proper account dialed in here. If you're practicing in Sim, make sure that if you're doing it with your live account, I strongly urge you to use your Sim account until you get a very high win rate on this. I'm saying like 70, 75+%. Once you start nailing about 3/4 of these and you're getting the scalp at least off, I would then and only then dabble into going live. Now, that being said, we do have this notion of what are called minimum criteria trades. Minimum criteria trades are trades where, like, you get above, say in the short condition, above the stealth line and line 2, as these bars did here. Let me be clear. And in the case of long trades, you come below the stealth line and line 6 into this area here on the long condition to get long. I would not recommend using limit orders for these types of trades. Not. Now, why would I say that? Why would I say that limit orders, as I'm showing here at the mid-band, are not conducive to minimum criteria trades? Here's the minimum criteria trade boxes I just drew. Here's one here on the short side, which never got filled if you boxed it, right? And here's our long example of a minimum criteria. We'll actually look at setups like that. Yes, that's exactly the concern. What I'm saying here, in fact, let me take all these off and let me clean the chart up so I can be very clear in how I express this. Okay, first I'm going to flatten everything. I'm going to take this all off, and I'm going to explain why that's not a good idea. Drawing tools, clear all tools, clean chart. Now, let's suppose that you saw this minimum criteria trade setting up here. Close above stealth, check mark 1. Close above line 2, check mark 2. Bars closing up in this area here, check mark 3. Now, if you had sell orders setting up in here, you could be filled. You could be filled. You could be filled there. You could possibly be filled here, right? Now, if you had a box, a region box of minimum criteria, and it had to close below line 2, you never got filled. In the case of the limit orders, it comes all the way up and retraces further to kiss the mid-band. So the trade setup was actually here. And depending on the tightness of your stop, if you had an extremely tight stop, say of like 4 or 5 ticks, buy to cover, you could have been bipped out on a candle that wicked that in and out, and it rolled and then gave you the trade. So if you're going to do this grab and go, I think somebody called it, or limit order, or limit laddering, I'm going to show you the technique, that, sort of a limit laddering type of technique, that you only do it around the midband. And you only do it on certain instruments when the volatility is conducive to taking that type of trade. So, for the record, we recommend using the box. The box is a good, prudent, it's semi-automated. The object trader manages the trade for you, puts in all the targets, the scalps, the stops, the trail, everything. You don't have to worry about it. Whenever it breaks out of the box in one direction or the other, you're pretty assured you're going to get at least some kind of movement out of it. Those are the pluses. And you know the risk. The risk is that it can flip on you and go against you very quickly. Let's go look at another example. Okay, we're done with this one. Let's go forward. Take this box off of here. Take this box off of here too. All right. Okay. All right. So here we get another thrust down. We see that. Oh, you know what? I'll talk about the scalp, and I wanted to talk about the scalp, but since we got involved with the whole whether you take the minimum criteria, let's talk about the scalp in the next example. Trend continuation, red bars, mid-band and all the bands are stair-stepping down. We got a very clear, distinct red stealth line. Background is red, downtrend still intact. Yes? So life is good. Now, from this fresh swing low, let's talk about anticipating, looking beyond the right-hand side of the chart to anticipate what might happen and what we might do if it happens. So I'm going to pause the chart right here, and I'm going to ask the team a question. I'll give you 5 seconds to answer. If you were going to look to sell this market short on a retracement, where would you like to see it go to take the trade? From here. Okay, you can see we're stair-stepping down. Starting to put in, look, appears like here, I'll give you another couple bars. There you go. So this kind of double bottom here at 45.50. It's kind of dinking around down here. If you're short from up here somewhere, you probably got to buy to cover stop, probably somewhere in here right now. somewhere between 47.75 and 48.50. Your buy to cover stop is sitting probably in here somewhere if it's tight. Now, looking on the right hand side, looking forward, anticipating what might happen in the future and what you might do if that happens, where might we look to enter a short? On a retracement if it retraces from here. I'm going to take this buy to cover. That's your stop from the other trade, right? Anybody? You can type in a number. You can type in an area. You can type in where you would look to get short. Four more seconds. 4 seconds on the clock. 4 segundos. Two seconds. If you have an answer, go ahead and put it in there. What you gonna do when they come for your trades? Time's up. All right, now I've got quite a few numbers here. I've got all the way from 31. I've got a line 2. I've got a 49 from Donald. We've got a 51.50, 48.50 from Lewis. Another line 2. Philip coming in at 50 to 53. Kathy, hey Kathy, 49.50 out of Kathy. A whole slew of mid-band calls. Line 4. So let's think about it for a second. Most of you set up here. So there's a number of ways to do it. I'm going to show you one I haven't shown before, and it's if you can, it's sort of keeping with this whole grab and go question. So those of you who said line 2, I just want to get this out of the way before we proceed. Line 2 would be considered minimum criteria, and if you recall, okay, well, in all fairness, yes, you might get a minimum criteria here, and if you did, we talked explicitly about only doing it with the box, so no limit orders here. Pinky swear with me and the team that if you get minimum criteria retracement trades into here on the long side and here on the short side, we're not going to use limit orders. This is not grab and go material. Grab and go is right around the mid-band. Now, the technique of laddering is as follows. You don't know how deep the retracement is going to occur if you're saying mid-band. The prudent thing to do is wait for it to come to the mid-band, put a region back box on it, take the short as we teach. However, if you wanted to do this, you could put a sell order here and another sell order here, like such. So in a sense, what you're doing is you are engulfing the mid-band with limit orders. And I wouldn't do more than 1 or 2. Okay, I wouldn't. This is not the type of trade that you put on, 27 contracts and load up the risk. Okay, especially if you're learning this. I don't know how many times to say that to you. This technique is called laddering. Laddering meaning that as a market will retrace in the downtrend, as it comes to different levels, you stand to get filled on those sell orders. If it was to come that high, right? I wouldn't go above this area right here. What would this be? The top of band, so 1, 2, 3, 4, 5, top of band. I would not go any higher than that because it's possible that it could keep going and you're laddered into 2 or 3 contracts and you just get hammered. You want to make sure that baby kiss and rolls right off of here. So let's retrace. Yeah. There's other things that make it more. Okay, you know what? I'm gonna write this in so everybody just commits this to memory. Okay, I don't know who coined this, but somebody said grab and go. All right, let's just call it that. It's called the grab and go approach. Okay, so it says putting limit orders. Okay, let's first talk about restrictions. The first restriction is only certain instruments qualify for this technique. Namely, let's just say ES for now. Let's just keep it really simple. Let's just say ES. I would try to learn this on ES. Just for now. I mean, you can learn the other ones later if you want to. You know, you can try, YM or whatever else trading. If you really know that instrument really well, ES is probably the slowest and respects the swings the best. So let's go with that. And you place the limit orders on, or very near the midband only. And that means no, this does not qualify under the no minimum criteria trades. That's a no-no, because we talked about why it could go deeper. And the final caveat here is that you must be trending. This obviously does not apply to a range. And we'll look at that in a minute. I'll show you why that's important. So you got to know that you're in a trend. You've got to know what the trend is. And you've got to have a very clear vision of where you're going to get in and how tight your stops are going to be. These are the three criteria for grab and go. If you're going to learn to trade this, we're all pinky swearing, of course. You don't break your pinky swear. You say you're going to do this in sim until you master it. Well, if there's a prior swing, Bruce, near the midband that you're considering, as you have right here, so this is a good example of that, where the prior swing level to get short was right here, and the midband happens to be just a little bit below it. So, theoretically, what you could do is take a horizontal line and put it right here. And actually, if you think about it, in fact, I was going to ask that question. If you're going to look to get filled short on a roll here, kiss and roll near the midband, where might your initial stop go? Well, you see it now, right? So your buy to cover. Now, you would not put the buy to cover in unless you're filled, right? If you put a buy to cover in here, you get filled too, and you put some buy to cover, it's just going to zero you out with a loss. It never rolled. It wouldn't give you anything. So you don't want to do that. You have to wait until whatever gets filled, whether it's 1 or 2, whatever, 3 you have here, depending on how high it goes. So it could come up and kiss this one. You get filled with 1, rolls over, you have 1, right? You come a little higher, kiss the second one, boom, now you're in 2. Like I said, I wouldn't do any more than 3 here. In fact, let's just do this. Let's just say, okay, let's have some risk control here. Let's have some risk control. So people don't get stung on this new thing trying it. We're just for now. We're going to say no more than 2 contracts max. Okay. Okay, that's our rules. That's our rules. If you're going to do this, you got to follow the rules. All right. Now, any other questions on this? Wait and put you wait and put your stops, Brian. Yeah, you wait till you're filled. Yeah, and it shouldn't break this line up here. The swing line up near line 5 at the top of band 5. All right. Okay, let's go ahead. Let's proceed. Now that we have the rules. Okay, your other trade stopped out from over here. If you had a stop in here, you're out. You're looking for re-entry. Market's retracing. Now let's really expand this out and look at what is happening here. So what happens, let me just put, what happens on these two bars right here? Anybody? Yeah, you're filled short. These two bars right here, you're filled short. Yeah, your sell limit orders are filled. Now that you're filled, let's talk about what you're going to do now. Okay? So now you have 2 lots short with a blended average, say, in the middle here. Filled 2 lots short with a blended average, say, maybe a tick above the midband right in here. Where does your initial 2-stop, buy to cover 2-stop go? Go up here, right? Buy to cover 2 lot. So now that you're filled, you got to get that in case you get some kind of crazy flippy doodle thing to take you out. So now you define your risk. Your risk is the distance between your blended fill and your stop up here. Looks to me like it would be approximately, call your blended average, 51 3/4, 6 ticks. Yeah, 6 ticks. So 6 ticks times 2 is what, $100, something like that. So that's your risk. Now, where would be your scalp target? How much do you want to scalp on ES? How far down do you want to go for a stop on a short? Where would you look to cover? Where would you pull your first contract off? At what distance from your fill? Let me give you some options. A, 4 ticks, B, 6 ticks, or C, 8 ticks. So your scalp target on the short, filled on the limit orders, blended average right here, on a 2 lot, where do you pull your first contract off? A, 4 ticks, B, 6 ticks, C, 8 ticks from your fill. We'll put 5 seconds on the clock. Type in a letter corresponding to how far you want to put your buy to cover scalp target in. A, 4, B, 6, and finally C, 8 ticks. Some of you trade ES, I know you do, so you will have a good feel for what this should be. Some of you might be learning to trade ES, in which case you're learning what the appropriate scalp target should be. Okay, cast your vote, 2 seconds. A4, B6, C8. 1 second. All right, time's up. Now let's look at this trade, and then we'll circle back and look at the other trade and see if we can determine appropriate scalp targets for our first contract. In fact, I'm going to put a line here where the blended average fill would be, right? A tick above the midband there. Okay, so what we did here, we're in a downtrend, just recapping. We had a trade that set up here that stopped out. We patiently waited for a retrace. We're showing our limit order grab and go approach is what we're kind of coining this. These 2 bars filled you short on limit orders here, just below the midband and above the midband with a blended average here. Once we were filled and the bars started to move in our favor, like here, we immediately put our buy protective stop above the swing right here. So let's see what the vote came in at. Let me see. I got 6s, counting 8s, 8, 8, 8, 8, 8, 8. B, a 6, a couple of 6s. Okay, so there's no 4s. Nobody voted for a 4. And there's a lot of 6s, but the predominant one is 8. So 8 ticks down from here would be 249 3/4, yes? So 49 3/4 would be your scalp target. 49 3/4 would be right here. So from your blended average entry, your scalp comes off at 8 ticks right there. Now, before we move on, I want to talk about the other approach, which is boxing using Object Trader. And I'm going to do it in two different ways. If there was sufficient time, and it looks to me like there was about 14 minutes between when this started to occur and when it rolled, so that's plenty of time to put a box on. If you had an extremely tight box on the midband, your fill would be at the bottom of this bar right here. Short. Oops, no, I don't want that one. No, I don't want that one. Okay, let's call this box number 1. So your fill would be right here. Box number 2, if for some reason you had decided to engulf all of these candles like such, then you would not be filled on box number 2 until the close of this bar right here. Now, can everybody see what I have just shown here, what the advantage of the limit grab and go approach is? What is the advantage of it? It should be crystal clear to you now what the advantage is to that approach. Just look at what's happening here. Okay, we show where we got in our blended average on the limit grab and go, right? And we showed our two boxes, the tight box where it filled, right here, and the larger box, box 2, where box 2 filled. Some of you typing in more money, laughing out loud. You get in much earlier. Better entries, better fills. You're taking the scalps off of the earlier trade when the other boxes are just getting filled. Yes. Here's the fill on box number 2. Box number 1, the tighter box, close of that bar right there. And here's the fill on box number 2 on the close of this bar right here. And the scalp trader, or the grab and go trader was filled here, and they got their scalp off already right there. The stops are tighter too. Normally we'll go 10 or 12 ticks on the initial stops. So trader box 1 filled on this bar right here would now have to put his or her stops way up here. 12 ticks above here would put you at 53. You're all the way up here. You're almost at where the scalp trader got in. The grab and go trader got in. Scalps on ES, most of you got that right. Okay, I just wanted to give a gold star out here for everybody that said 6 or 8 ticks. 6 or 8 ticks, 6, 7, 8 ticks is pretty much your scalp. 4 is a little too tight, mainly because if you only get 4 tick scalps and you get bid on a couple where it flips against you, you're just breaking even, right? If you're only getting 4 or 5 ticks out of a scalp and your losses are 4 or 5 ticks plus or minus a tick or so, less slippage, you're just breaking even. If you can get at least 6 or 8 out and your stops are as tight as 4, and even if you're at 50-50, you're still making money. Everybody follow that, right? Okay, so let's go ahead and pan the rest of this trade out and see what it did. Okay, are you ready? Let's play the rest of this trade out. Uh-oh. What's going on here? What about box trader number 1 and box trader number 2 when the market does this? Any idea what we call that? How about grab and go trader? Yeah, this is called feeling heat. This one's upside down by 6 ticks. Never got a scalp off. Maybe more. 49.50. Yeah, maybe as much as 8, 9 ticks. Box trader 1 also feeling a couple ticks of heat too. Comes up, kisses and rolls. Grab and go trader's already out of 1 contract, and you would take that. You would of course take your thing down to 1 lot because you only have 1 left, right? You only got 1 on. You got 1 off out there at that light, and you can put that baby right there. So now you got a free trade, right? Blended average short was right here. Let's take this off right here. Now you made 8 ticks, and you're sure to make at least another 1 or 2, right? Everybody see that? Well, let's advance the chart and talk about how the rest of this played out. Okay, it looks like it's going to go down, starts to move in everybody's favor. It's trying to get down here to 45.50, hits 47.50, starts to bounce, starts to come back up, and then comes all the way through it and reverses. So let's see if box trader 1 got a scalp off. If he went for 8 ticks, he or she went for 8 ticks, that would be 48.25, which would be right here. So box trader number 1 with the tighter box, I'm going to draw his scalp would have made it. He just would have got his 8 ticks. He or she would have just got their 8 ticks right here. Box trader 1 filled on to close that bar out of that box right there. Box trader 2, did box trader 2 get a scalp out? Box trader 2 filled here. Doesn't look like it. Yeah, they know you never got 8 ticks. Maybe you got 6. Let's see, 49.25 to 47.3. That's like 5 ticks. This one's out of luck. Now, depending on how grab and go trader got in, you might have, after this roll, taken your stops down into here. So that would have been your second exit close to where your scalp was. And you would have been taken out with a trail right in here somewhere. If you can put limit orders in on Object Trader, you can use this method. If you can't put limit orders in on Object Trader, then you can't. I believe that's coming in OT 8. Let's look at some examples. I know everybody's like, wow, grab and go looks like it's this thing since sliced bread, and I'm going to be all over that and what have you. There is not always times where you want to do it. Let's look at a time where you might not want to do grab and go. Let me clean this chart off. Stand by. Cancel all orders. Clean chart. Give me 1 second to clean this chart. Stand by. Where's my... I always lose that drawing tool thing there. There we go. Okay, that's good. Scrunch the chart back down so we can look at what happened today. Okay, there's a sell-off. Okay, let's do a fun exercise. Let's do a quick fun exercise, and then we'll look at places where you probably don't want to do it. Okay? So what we're going to do is I'm going to do something similar. Yeah, you can do limit orders on OT. Right click, just like I showed. Yeah. All right, everybody ready? We're going to do an exercise together. When you think you see a grab and go trade, you type in the letter G. This is this morning. I'm going to show right at the open. And here we go. 6:30 Pacific is right here. Market just open. Remember, we're looking for grab and go trades in our example. And everybody knows the rules. We don't have to put the rules back, do we? Everybody know the rules? Okay. Okay, we're in a sell-off, very precipitous sell-off. Everybody knows why. Those retail numbers were the worst retail numbers in 9 years. And the market did not like that at all. So at 5:30 pre-market, the sell news bots kicked in right here. Very precipitous free fall on the equities right before the open in the pre-market session. In fact, I think the Dow opened down like 220 points or something like that. Okay, here we go. 6:33. Looking for G trades. Grab and go. There's 6:36. Let's get the bar a little bit bigger here. 6:37. 6:38. 639. The bar is nice and super big. Fresh swing low. 6:48, 6:49, 6:50 a.m. Pacific. You are 29 minutes into the equity market open in the U.S. Okay, 6:58. You're coming into 7 o'clock. I think there was some news at 7 a.m. Pacific. Okay. There's 7 right on the button right there. 7 a.m. right here. 7 o'clock. Okay. 7:01 coming up. 7:02. 7:01. 7:01 right there. Okay, let's keep going. There's half an hour into the equity market open. All right, I'm going to stop it right there. All right. How many of you got them? How many grab and go trades are on this chart? Type in a number. How many grab and go trades are on this chart? Four seconds left. Just type in a number. 1, 2, 3, 4, 5. Pick a number. You got to be able to see them, right? How many? ¿Cuántos cumpleaños? You know, the literal translation of that is how many birthdays have you had, which actually in Spanish means how old are you? ¿Cuántos cumpleaños? All right, I'm seeing a lot of 3s. I see some 2s. Frank says 3. Philip says 5. Chuck says 4. The sweet spot appears to be 3, 4, or 5. Okay, I'm going to show you the 3 definite ones. By the way, grab and go, just to be clear about what we're showing here, is just another term, the way we've coined it, for a mid-band trade. Yes? A mid-band trade, you can obviously still box, that we've taught for years and years and years and countless hundreds of webinars. We're simply showing a different entry technique. And you know, keep in mind, they don't all work out, okay? You know, some of them work out great and you get good entries. Other ones will fail. The key, like any trading strategy, is to keep the amount of losses low and your winners to be at least 2 or 3 to 1 over the losers. If you called out G when these bars formed right here, you were correct. That was trade number 1. Short. Now, if you'd drawn a mid-band box, you could have been filled on this bar right here. If you put limit orders around the mid-band, you would have been filled right on or near the mid-band. By the way, if you like using the region box at the mid-band, by all means continue to do so. I'm just simply answering a question that came up in the room today. How might you do something like that? So that's why we're showing it. Okay, second G trade set up right here. Limit orders clustered around the mid-band. And number 3 would be right here. We took these. I took this short. We called it in the room. Took it. Took this short. Got a little scalpy off. Dumped it. Looked for the pullback. We got long right in here. And we rode that baby all the way up. That was a beautiful winner, wasn't it? Look at how beautiful this long trade turned out to be. I made good money on this trade right here. Excuse me. Good money on that trade right there. That was a moneymaker of the morning. This short was pretty good too. We made good money on the short. This we got a little scalpy off. That was it. Remember? Now, some of you might be saying, hey, ho. Wait a minute. What about right here? Does that qualify? Well, now that you see it in hindsight, in retrospect, what say you, team? Is that a G or not a G? So we have 1, 2, 3. Is this number 4, yes or no? Does that box qualify as what we call a grab and go trade? Yes or no? Simple question. Yes or no? Box number 4. Remember our criteria from when we started off this discussion. Does it meet our criteria? We should all know. You just, you don't have, I mean, you could write it down if you really wanted to write it down. You should really, commit it to memory so that when you see it, you know what it is, what the rules are, what the rules of engagement are to enter a grab and go type trade. Here's 3. What say you, team? We'll take the votes. Is this grab and go trade number 4 right here? We only have a few votes. So we've got a couple of no's and I've got a ton of yeses. So not to be willy-nilly, let me answer it like this. We can clearly see that as far as a grab and go type trade or a mid-band box trade, they're essentially basically the same. The only difference is you're using limit orders to get in. So the bars have to technically come with this band right here and ideally at least touch and close on or right around the mid-band itself. So this qualifies, this qualifies, this qualifies. So here we didn't quite get to it. So that's here I'm gonna leave this one a little bit in limbo, and I'll show you why. It's a function of where you would have put your sell limit orders. Yes, if you put sell limit orders in here, or you put a sell limit order in here, or some combination of these two, the question then becomes: are you close enough to the mid-band, and would you have been filled on the wick of that candle? That's the question. It's hard to say. It's hard to say. It's possible you were filled, in which case, yes. Did you get stopped out? Maybe you did. I think if you want to follow the rules, if you want to be super safe, in this case here, this is sort of between a mid-band and a minimum criteria. You're in limbo land here. I would almost say a no on this. If you're going to follow the rules and you want to learn this, you got to stick with the rules. And the rules are it's got to be on the mid-band. If it's not on the mid-band, you don't do it. That's a negatory. There were 3. All right, any final questions? I'm going to go ahead and wrap. We went a little bit over. That's okay.